Alright guys, what's going on? This is Ryan, aka Cantor and Clark with BlockRoots, and it is 10:14 a.m. New York time on Tuesday, March 3rd. And before we get into anything, just as a reminder, as long as you are subscribed to the BlockRoots YouTube channel, all you need to do is leave a comment below and you're automatically entered in to win $100 in Bitcoin. And we give away $100 every single week. So I'm going to try to keep this as brief as possible, although I know that that's an ambitious statement coming from myself. But I have a few things to talk about, and as you can see, I have one of my equity brokerage accounts open on the screen right now, and I think we'd be remiss to not talk about what's going on in traditional markets. Okay, I think that we like to idealize Bitcoin 90% of the time and talk about it like the perfect uncorrelated risk-off asset. All right, but I think that it behaves more like a risk-on asset than anything else. And risk-on assets benefit from overall high levels of global liquidity. Okay, they benefit from good times. They benefit from there being an excess amount of capital, and essentially people have more money to spend, and they're searching for yield in areas where there's a bit more uncertainty. So think of it this way: when you have more money in your pocket and everything is good, you're more willing to buy those things that you might not necessarily need. So talking about things that are not necessities, all right? For example, luxury goods. Okay, luxury goods are something that you buy more of as your income increases. So there are times when we see that Bitcoin is correlated to gold. Right? There might be these short-term correlations, and when the market is relatively calm, but getting into more or less a risk-off mode, all right, maybe anticipating some type of short-term correction, we see that sometimes they do move in tandem, all right, however brief it is. And I do think that this is essentially forced, but I think that that forced behavior ends up becoming a sort of self-fulfilling feedback loop nevertheless. So when you have people that assume that there's a connection, they might, rather than putting all their eggs in one basket as one risk-off basket, putting it all in gold, they might assume the connection exists, and because of that perception, allocate to both of them, and then end up fulfilling that correlation. Now, this is not something that's long-term enough, and obviously Bitcoin is not big enough yet, but it's becoming a macro asset. All right, so now's the time to pay attention. And if you've been truly paying attention, you'll see that from the last frame till now, we've jumped ahead by about 2 hours, and that's because my recording software decided to crap out on me. And then I crapped out on my recording software. So we have G7 finance ministers meeting, we have Powell cutting rates, and we have all these efforts going in to ensure that global economies don't come grinding to a halt. And at this point, the entire global economy is very interconnected. All right, it's a tight web in some areas more than others, but from small business to large corporation, we're all connected at this point. So it's not only the biological effects of the virus that we need to fear, it is the global macro implications of people not going out and consuming as many goods and services as they previously were. So for example, let's just say you have a family that normally goes out to dinner twice a week. All right, they normally go out to dinner, let's say twice a week, and because of the coronavirus, they're not going to go out at all now. So now that local restaurant, that small business owner, they're not making as much money. All right, now they're not making as much money, so they're likely not going to keep as high of a labor as they normally would have. So they're probably going to cut labor a little bit. They might send employees home. They might not call employees in. They might go to a smaller staff. This affects the employee who maybe has a child and then is suddenly making finance decisions that they previously weren't, because maybe the money now is a little bit more thin. And you can imagine how this continues to trickle down. And then when things get better, it's not like that family that was going out to dinner twice a week. The first chance they can, it's not like they're going to go out to dinner 7 times that week, right, to make up for all the time they didn't. So there's a lasting effect to be felt by this. So Bitcoin's role during this, and I wouldn't say role, like it has a role during this, or rather it's going to be important to pay attention to how Bitcoin behaves during times like this, because it hasn't been in this type of scenario, and we'll see how anti-fragile it truly is, because even something like gold is exposed to systematic risk. So normally gold, which would have an inverse correlation to risk on assets, gold being risk off, being a haven, being something that benefits during times of uncertainty, even gold declined with equities. And this is because equity asset managers, since their positions were put against the fire, all right, and they're leveraged, they were in a position where they could have been margin called. And in an effort to protect from being margin called and essentially them being in a state of forced liquidation, they had to free up capital from their gold allocation to put into their equity position. So even gold, which should normally benefit during times like this, okay, experienced a decline. So there's really nowhere to go at this point. And Bitcoin does not exist on its own island. And if we see that equity markets, all right, global markets as a whole go into a major decline, I would say that Bitcoin, being a risk-off asset, would likely, a rather risk-on asset, might experience a negative drawdown with the rest of things, because people are going to, again, be put in a position where they're really choosy about where they're putting their money, all right? And they might be pulled a little thin because they might be low on money. So at that point, how likely are you to maintain your altcoin exposure when you're already having trouble to begin with? And that might have been a little all over the place and wordy, but I think we got to the point. So all right, so let's take a look at the chart really quick. So I have my levels indicated already. And again, these levels are derived based on where we spent time and where volume was transacted. Okay, these do line up with key structural points. Obviously, areas within market structure, key swing highs, swing lows, areas that are deemed to be significant based on past reactions, they do tend to translate moving forward. I will, as the chart evolves, eliminate things that are no longer significant. So these are more or less my intraday areas. And again, I always look for shifts in control. So I'm looking for, one, what direction the market is trying to travel, and then two, is it doing a good job of getting there? Now, I would say that on this chart, the most important area for bulls is right here. So 9,500 area. This being that if this was the floor, you would have wanted to see that this previous support, turn resistance, maintained as support. All right, if we're going to talk about this continuing upward. Instead, we lost this area and we lost market structure, and that immediately has to bring in these other areas. Okay, you cannot just continue to turn a blind eye to it and be completely bullish in the face of new information. So right now, the other areas that I think are most important, and again, these line up with the weekly January 6th point of control, week of January 20th low, right, are these areas within structure. So right around 8,000, 8,200. And then the top side of this range, okay? Being that we lost a key area and we're going to continue to either move through these key areas or find support. So if you were looking at this on a 20-minute chart, on a half an hour chart, on an hour chart, and you're just looking at this structure and you saw this, okay, and you saw this, you would ultimately say that, all right, if price was ranging down here, there would be a high probability that if we were rejected again at these highs, that we would likely come and revisit this area down here again. All right, the top side of this range coincided with the low of this range. This was an area we spent over a month within. This was an area we spent nearly 2 months within. Okay, it would be reasonable to assume that we'd come down and test the top side of this range. So for anyone who was assuming we would never see 7,000 again, I'd say that it's completely asinine to make that type of declaration. So first things first, where we currently are, all right, as far as 9,500 goes, that would be where I would say to become completely bullish again if we have a clear break through that area. But ultimately, we still have a lot of opportunity on an intraday basis for longs, okay? Now, the other day, the market had come off of a 3-day move to the downside, and it was, in my opinion, overextended, all right? So I took a few longs, and I took them as very short-term positions in that I got in at the swing low. I did not look for the immediate sign of control, and I was playing what is in essence a swing failure pattern, and I was getting out after a very short-term move, all right, or after a very small insignificant move. I was just kind of taking a little bit from the market and not keeping on any position whatsoever, because really there is no change to be seen, all right? That's a reaction that you can expect, but no real long-term change to assume. So we had a 3-day move down. All right, and it was successively larger and larger. So the last day was an 8% move down, or just over 8%. It was 1.6 times ATR. And ATR is a volatility indicator, but it also is an indication of market norms. It's the average true range. So our move was 1.6 times the normal movement for a daily candle, okay, over a 14-day period. So if you could use either a 12-day setting or a 14-day setting, that's pretty standard. Some people use a 7-day setting. It all depends on what your system is. So by all means, to me, that meant that we were overextended to the downside and we could expect some type of mean reversion. But when this happens, it's important to understand that this doesn't necessarily mean that it's going to happen exactly at a certain point, right? When mean reversion happens is another thing. So I still need to see some type of correction or some type of corrective behavior to indicate on the lower time frames that that control is beginning to shift. So sellers are in control when there's a period of lower highs and lower lows. All right, so one indication of buyers are gaining control is when you have a shift in that. Okay, so when you have a period of lower highs and lower lows, and now we have a higher low potentially in the making, that can be an indication of buyers regaining control. Now, ideally, at these areas that I have designated, I want to see that there is an aggressive action taken into these areas, and for that aggressive action, there's really no follow through in price. So you want to see where the market is trying to go and if it's doing a good job of getting there, and by that, I would want to identify that it wasn't doing a good job. Okay, and on a footprint chart, this would look something like if we're looking at the bid and the offer. All right, as we move down, we would see that there's a ton of aggressive buying, rather aggressive selling. So let's say, for example, we have 100 million contracts sold here, but there's no active buying. Instead, at these lows, which was hard to discern, was whether or not there was any really indication of sellers being trapped or buyers being trapped. Okay, because we still did have a significant amount of buying activity aggressively at these lows. Normally you want to see that there's aggressive selling. If we're talking about a move that's going to move off the low further back up, you'd want to see aggressive selling, all right, and passive buying. So no real indication of aggressive buying, this being a low value, and all of that buying being in the form of passive execution, which that aggressive selling was hitting into. So if anything, right now we have equal highs here. We have a low right here, potentially in the making. We're really close to an area of significance within market structure. This could be setting up for a little bit of sideways action and a potential move up to these lows. All right, I wouldn't say that that is out of the question. The first sticky area that I'm going to say is something worth considering is this 9150 area. All right, this represents the low of this daily on market structure. So if we just go out onto the daily, rather, didn't say that properly. So the low right here, and this also represents a naked point of control for this prior day in which we dumped. All right, so naked point of control meaning that this is an area that we have not interacted with, all right, and it's actually right here. So it's a point of control of a daily candle, and we have yet to come in contact with it, meaning it's extending out and it's yet to be touched. So an area where, based on volume, there was a good amount of interaction. You can see that that lines up with this cluster. And I would expect that if we do break above 9,000, which I would say is bullish, that this would be the first area where we would have a little bit of friction. And ultimately, I would want to see us come back to this high. I'd say that this would probably represent a short opportunity, if anything, because I don't think that we're just going to, right now, after putting in this structure, immediately do something like this. Right? I don't think we're going to lose this support, come down here, show bullish market structure, buyers regain control, trap sellers, and then move all the way back up. It doesn't seem to me like that is going to be a reasonable type of activity we could expect. I anticipate that, price, maybe if it does put in a low down here, all right, don't take this drawing accurately. We come up here, we're rejected. Maybe we range a little bit here. Maybe we come down and test, again, these lower bounds. Because again, how many times did I say again? This is at this point not out of the question. All right, we have to take into consideration that in this market, especially when you lose a technical level, considering there is no fair value, there's not a whole lot of incentive for people to step in between. All right, so if you and I are currently, I just want to have a blank chart. So how do I get to the blanky blank chart? Let's get this out real quick. So here we go. So if this is a high time frame support, all right, and this is the next high time frame support. All right, let's say that these are separated by $1,000. All right, Bitcoin is treating this as support. It loses it. All right, it loses it. It's clearly rejected under it. Maybe it finds temporary support right here, but there's really nothing going on between here. Let's say that this looks like a double distribution profile. There's kind of a big gap between here, and now we're in no man's land. Well, if there's no real strength on part of buyers between this area, no clear indication that buyers are attempting to regain the support, well, then there's not a whole lot of incentive for buyers to step in continuously. So you'll see that if this continues to show weakness, this order book will pretty much evaporate. So buyers will step out of the way and they'll just let this get to the next area of importance. So it becomes rather self-fulfilling in that manner, that if you lose an area of market structure that is very significant on the higher time frame, there's a very high probability you're going to go to the next area to do business. Okay, that's just how it works. Everyone's acting under the assumption on this that if we lose this level, that there's no incentive to step in and buy right now because they're going to be buying at lower prices down here anyway. Okay, so just keep that in mind. That's how this market tends to react. So aside from that, all right, yesterday I took a trade on Link and I shorted Link from, I took Link from 4.28 down to $4.14. And now, so this is actually on Phemex, and it's a platform I've been using now. It's absolutely awesome. It is the fastest platform out there. And as soon as it gains as much attention as it should, it will, I think, be the superior platform because of the amount of speed that it offers. But they actually just offer Tezos. And if anything, if there's something that I'm looking at shorting now, I think that now that the euphoria has kind of tapered off, I think that it's Tezos. All right, let's just look at the chart really quick. They offer USD, so that's what is great about Phemex. You don't have to get into synthetic. You could go right to USD. All right, and you could have sub accounts too, so you could trade on multiple positions. You could have opposing positions. It's not something that's advised, but if you want to keep two legs open because you're uncertain, you want to close one out when you have more certainty, that's completely fine. So looking at Tezos right now, I think that this represents a short opportunity. If anything, maybe we put in one more move up, sort of like Link. Link looks like it has maybe one more breath. But I think that if we do experience more of a correction with Bitcoin, that nothing really changes with alts. I don't care what the narrative is, what the story is behind this one. They are all, for the most part, vaporware to me until the market is recognized on a macro scale again and we have that major push. And for me, as I've said multiple times, this is when we make a new all-time high in Bitcoin, right? When we make a new all-time high in Bitcoin, when that occurs, the amount of participants that brings in, again, they come into the market, they want to look at cheap alternatives to what potentially can be Bitcoin because they don't know better, and they look at the cheaper things and they buy things like Tezos, and that's when you see those ridiculous gains that go on for a very long period of time. But right now, nothing has really changed that much. I think that we're seeing a ton of excellent gains by alts, but I think a lot of them just return. I think that 95% of alts make new lows. All right. And I think that Tezos is going to likely come down to right around 186, this whole top side of this range right here. So if we're looking at this chart right here, I think that there's going to be a good short opportunity, and I'm absolutely going to be putting on a short in the near future when that opportunity presents itself, and I'll be using this platform that we're looking at right here. So that's that, guys. Hopefully that has been brief and informative. If you guys have any questions, feel free to reach out. As always, it's a pleasure. This is Ryan, aka Kenner and Clark with BlockRoots. Exercise proper risk management and trade effectively.